A lot of work has happened in the last 1 year.
Have people who are creating the wealth in this country.
This year, I think, is one of the most phenomenal budget.
We are increasingly seeing adoption of digital tools by customers.
Whatever was available for large enterprises for a long time, it's available to a startup, a small business.
Very good morning to all of you. Truly humbled to be moderating this panel. I think we have a power-packed panel today. We have people who are creating wealth in this country, distributing wealth in the country. We have people who are, We have people who are making helping people becoming financially protected. We have panel members who are enabling access, enabling payments platforms, and creating enabling software. So, without further ado, I will get into my questions and hear thoughts from these esteemed members. Sanjiv, I'll start with you. You are at the helm of one of the biggest distributors in the country. How are you seeing the retail investors, investment patterns evolving? And how do you see these changes over the next decade, helping India's economy grow?
So I think India is at a cusp, because people are becoming more educated, and that is actually changing the fabric of this country. Earlier we did have a problem that only very few percent of Indians were educated. They wanted to move to the next level. They wanted to achieve more in life. But if we look at it now, that's there with every home. And today, technology, internet, knowledge, education, look at the influencer economy. How many lakhs of influencers are in India? And influencers is not only a, uptown chic person, but they are people sitting in the farms, they are people sitting in villages, and they have got a global audience. So this whole world is changing, this whole wealth is changing. Today we have people whose parents were drivers and they are achieving to become IAS officers, or they are getting good jobs. So this whole world is changing, but the fabric behind that is money. Okay, so I feel that one of the greatest revolution has been availability of finance. Okay, so when the NBFC revolution came in, the availability of finance helped people boost their goals and dreams to achieve a next level. Now, once you have the finance and you start earning a bit, then you start saving. Now, the availability of the saving instruments and the way Indian market has performed, 18 to 20% CAGR growth. Even if I take this current correction, it's down to 17% CAGR in the last 25 years if you were in a multi-cap fund. That means that's a humongous value creation that has happened. Our own client base, other day we were tracking that how many people started their mutual fund journey with us, and today have more than 1 crore in their portfolio. It's more than 4 lakh people. That is the kind of wealth that has been created, provided you were systematic, you were honest, and you were on track. And now with the current changes in the budget, this year I think is one of the most phenomenal budget. Because what it has done is that up to 12 lakh rupees, everything will become white. So it's one of the biggest wars on the black money. The amount of white money in the industry will go up. People will have CIBIL scores. They will be able to take loans. They'll be able to buy houses. The whole fabric of this country, which was all the real estate being cash, is going to change with this budget. Yes, it's going to take 2 years. A lot of work has been done for MSME, a lot of strengthening has been done there. And finally, there is a lot of, now the availability of the products due to AI technology is also much better. The KYC is very difficult, but it is much more easier. So point is that access is there, knowledge is there. I think it's an opportunity, huge opportunity out there. Where we are lacking is there proper distribution or proper access has not been thought through. It was totally dependent on banks. The whole agency systems have been super weakened by the regulators because nobody was looking at it. That okay, it'll all happen digitally, but it doesn't happen. Money is the most important asset in a person's life. So it needs a little bit of that connect and touch. So I think that is the only missing part, but we are looking at a revolution, and I'm very, very confident that next 10, 15 years, you will get a tremendous cargo on your investment if you remain invested in the right stocks. But obviously, there's a lot of, whenever there is a hype, there's a lot of bad stuff which also goes up. But if you're in the right companies, right shares, you will make humongous amount of money because of the power of compounding.
I think nuggets of wisdom, but I have to ask you a follow-on on that. Since you are closest to this data, how are you seeing the new age investor? What are their investing patterns? Are they long-term investors? Is there a particular asset class that they prefer?
So the new investors, you can't blame them. See, they are investing as per what they have come across. So there is a generation who invests in Paytm or Grow. So they are all trading. So they are having a very trading, options-oriented view. And last 5 years, everybody made money other than the last 4 months. So everybody was a hero. But then there are other people also who are reading Rich Dad, Poor Dad, who are very informed. They are financial planning oriented. They want financial planning. They want long-term investing. So that also itself is an audience. So I would say less than 30 is more transactional, future options, innovative products. 30 to 40 generation is a person who wants financial planning. These are the people who are what we call the luxury generation, who are willing to pay a premium. Or I want the best advice. I don't mind paying more for a quality. Today, if you look at a shampoo, earlier a brand would find it difficult to sell a 100 rupee shampoo. Now these guys are going to Amazon, buying a 600 rupee shampoo because it says organic. It says it's got this benefit. So these are people who are willing to pay a premium. And that is a very exciting part for me because that's a huge population of these people between 30 to 45 who are willing to pay a premium for advice, who are willing to pay. So I think that, and they are in crores. Okay? So that's a huge and very terrific opportunity out there. And now they're earning. They're in a place where they have enough money to be able to invest, save. They have enough liabilities to be thinking about insurance. So that's a very exciting area for us.
Thank you for that. Dipu, I think the next question for you is, we all know that the pandemic accelerated insurance adoption in the country. But it also changed the way companies like Bajaj, Allianz engaged with the customers. So what are those permanent customer engagement shifts that you've seen, and how are you building on those?
It's a good question, because when we live in the post-pandemic world, we have forgotten now about how we used to live during those days, right? With sanitizers and masks and social distancing and what else and whatnot. So I think one of the key aspects which has changed post-pandemic is from a customer experience perspective. Earlier the call center used to be the big daddy, in terms of dominating all ways of reaching out to the customer. Now the contribution of call centers has come down. For example, in our company today, 1 out of every 2 customers is serviced via a bot, whether it's chatbots or voice bots. And one interesting aspect which has happened in this entire period is today digital channels are also available in multiple languages. Earlier they would be typically available only in English. I think now that they're available in Indian languages as well, we're able to amplify our reach. So that's clearly one shift we've seen, which is a permanent one. The other is moving on from AI to Gen AI. Gen AI has become the rage, right? It's caught on with speed. And when it came to the market about over the last several months, we've also adopted Gen AI. So what we've been able to now do is also give a lot of contextual assistance to our folks who service our customers. And when that happens, the resolution time, reduces dramatically, and even the quality of resolution, goes up substantially. And it's reflected in our NPS scores. Our NPS scores have also gone up substantially over the last few months and quarters. Going beyond customer service, if you look at the entire customer life cycle, for example, earlier, if let's say you had a car and you crashed it and you reached out to the insurance company, for a claim payout, the company would basically send a surveyor to the site of the crash. He or she would examine the extent of damage, submit a report, and then the whole process could take time. Now it can happen in 20 minutes thanks to AI. So in case you crash your car, just take photographs and upload them. We have an AI engine which will assess the extent of damage and give you the amount. You confirm the amount and the money is paid to you. So what could take days, happens in 20 minutes. So this is now happening, and we are increasingly seeing adoption of digital tools by customers. So I think that way the landscape has changed permanently, and I think we'll only go from strength to strength, in the future period as well.
So faster, quicker, more agile essentially is the new engagement pattern. Great. Balaji, next one is for you, and PTC Financials for the audience works in a very interesting sector. They work in infra and energy financing. So I think it itself is a very niche area. So my question to you is, are you working on any innovative solutions, or should we all be looking at innovative solutions to bridge the estimated about $1.5 trillion infrastructure funding gap that we have, specifically going towards the next decade, where we're looking at growth to continue?
Yeah. Thanks. I think infra is not a very glamorous word. In fact, it is a 5-letter word compared similar to a 4-letter word. The reasons are pretty simple. When you're providing infrastructure, there is some amount of displacement, and for the cause of the greater good, a few people are adversely impacted. How do you take care of them? That is very, very important. And more importantly, the benefits accrue over a period of time. You could have multiple good years. Sometimes you'll have an adverse year. Therefore, the returns are lumpy, which makes them not attractive to a large set of investors and policyholders. Having said that, right, if we need to progress as a country, we require affordable, high-quality infrastructure. And the numbers are humongous. People talk 1.5 trillion, 8 trillion, 2 trillions. Whichever way, the numbers are pretty large. And in today's day and age, because of technology, large is not always better. There could be infrastructure requirements of varied sizes. And infrastructure does not just mean power units. It could be even as mundane as a solid waste treatment plant or wastewater recycling, multiple types. So one of the things which we are seeking to do, we are a small company, not as large as State Bank or Power Finance Corporation. How do we focus on smaller infrastructure projects? And two, coming back to a question of innovative finance mechanisms, hitherto, the entire emphasis has been on creation of new infrastructure. That's there. But an equal benefit could be accrued to the masses if you modernize the existing infrastructure. Just like, for example, it's not realistic nowadays to reduce pollutions. People talk of phasing out cars more than 15 years. But if you take a BS2 or a BS3 car, and if it's possible to replace the BS2, BS3 engine with a BS6 engine, pollution reduces. Like that, how could you modernize the existing power plant or add additional lanes onto the road? These are the things. To come up with innovative finance solutions, two key things are required. One, offer solutions that add value to the customers so that the customers' equity returns increase. That's one. And that you would be able to do if you have greater financing opportunities. So how do you ensure that by providing finance as a financial lender, you also need to have sources of capital? How does your deployment becomes attractive to a larger set of institutional lenders? So if you can focus on these two things, with keeping the customer in mind, because that is the most important thing. A financial institution will only make money over the medium to long term if the customer is successful. So offer solutions that add value to the customer. It could be leasing, fractionalization, tokenization, any of these things. That's something which you need to do.
I think you've touched a very interesting aspect. In one sentence, you've called out leasing and tokenization together. Okay, I'll come back to you in this round. But Prashant, my question to you is, uh, in all this, with respect to engagement, with respect to increasing financial reach, with new solutions, how is Zoho thinking about their financial management products specifically to the India landscape? And I'll give you the follow-up to that right now. Specifically when it comes to small and medium businesses, how do we enable access to tools like AI and emerging tech, which was traditionally available to large companies?
So thanks, Sidharth. So adding on to what my co-panelists said, right? At Zoho, we are, we have somehow figured out a way to work things at scale, keeping our costs minimum. For example, we run our own data centers that helps us manage costs. So that's the thing. Similarly, we built a suite of products. I think the audience has been for my presentations. We built various other solutions, 50 different products, even beyond the finance suite. So particularly if you take India, right? So there are a lot of, you can bucket this into one, handling the local regulations, keeping up with ever-changing regulations. Sometimes we feel that regulations, things like GST actually change even faster than the technology itself. So we need to have the platform and capabilities to keep up with that, and just not India, but globally as well. Furthermore, the idea itself is to bring everything, not just one part of your business, bring almost everything that a business does into one platform, so that there is continuous flow, cross-functional data you have on real-time basis. So what we are trying to do here is, whatever was available for large enterprises for a long time, it's available to a startup, a small business, the small retail store. Everyone gets to benefit from the same kind of power, technology power, regardless of the size of your business. Now, over that, our platform capabilities help businesses to solve problems that we ourselves may not have imagined. So that's an additional benefit that we bring. Beyond that, of course, of late, what we have seen is solutions that we have built in India, thanks to our own digital public infrastructure, is solutions that we are taking globally also. For example, the connected banking feature, the ability to pay suppliers, everything right from your accounting system, which it was a homegrown solution, and we showcase it across the globe. In fact, in a recent conference, we spoke about ONDC. Canadians are struggling with e-commerce. They are trying to figure out. We said this could be. We also work with ONDC. We are a part of all these digital public infrastructure. We are a GST Suvidha provider. So again, as I alluded to my presentation, right? It's kind of visibility into the finances that if we are able to bring to the business owner first place, so that they know how to manage their cash flow better, the authenticity of the data coupled with that helps enablement of credit. And then what we are also brought is, if things like if you are on a franchisee model or dealerships or subsidiary, if everybody's on the same platform, the immutability of the transactions helps in supply chain financing. So ultimately, as I mentioned, right, finance and software both are meta industries. They try to solve the same problem at the end of the day. Optimize your inventory, optimize your receivables, ensuring that your cash flow is fine. So ultimately, both are kind of intertwined at the edge. So yeah, that has been our focus. So we are also a RBI authorized payment aggregator in India. So it helps that we are able to go beyond software, help wrap credit and payments around our day-to-day operations to help businesses.
Excellent views. Akshay, so Edenred, as I understand, operates in a very specialized payments ecosystem, right? Of rewards and financial well-being. How do you see this evolving with a mainstream payments ecosystem in the growing digital economy going forward?
So, Edenred operates in this specialized payment ecosystem. I think when it comes to payments, I think India has one of the most vibrant ecosystems anywhere in the world, right? Our Fintech and BFSI markets are roughly $1.3 trillion TAM, right? TAM. Our payments market is about 208 billion, right? And it's growing at a very healthy double-digit growth percentage year over year. And I think we're just getting started, right? So if you look at the average payment gateway in India, you have a plethora of options whenever you're making payments, whether that's credit cards, and even on credit cards, we have, you have the MasterCards and the Visas of the world, but you also have RuPay, which is homegrown. You have UPI, you have net banking, you have buy now, pay later services. So I actually expect a lot of these alternative payment solutions to, continue to diversify and continue to gain significant market share as well. So because of the vibrancy of the ecosystem itself, I think there's like huge potential within this market in the areas that Edenred plays, but even for other players, right, in the payment space. And specifically, I think at Edenred, globally, our ethos is to help the end consumer sort of be more financially aware, contribute to their financial well-being. And with the increasing inflation, I think one of our core values actually is to improve the power of spending for each consumer. So I think with this specialized payment solution that we have, I think we're able to sort of not only streamline payments and give people another choice, but we're also able to increase their spending power, right? And that's something that I think in a market like India, I think that's extremely important, right? So I'm actually seeing, I'm very, very bullish on growth within this specialized instrument space.
Well, spending definitely adds to GDP numbers, but from spending to saving again. As Robert Frost said, right, miles to go before we sleep. So a lot has been done, Sanjiv, but lots need to be done, right? Tell us how we go down, how we go deeper, how we get the mass India to invest. Give us your views.
See, the mass India has now been brought into the banking. Okay? So they have, to a certain level, been exposed to investing. So they are not, the whole old paradigm, I think the biggest thing to break was that I want to keep my money with myself, or I want to keep it in a jar, I want to keep it under a carpet. Digital money, is it safe or not? So I think with the scheme of opening bank accounts, Jan Dhan, point is that people have got used to having their money not with them and to a certain level invested. And if you look at the gold bonds, although they were more popular amongst the rich, but look at the kind of returns they have given and what amazing cost they have cost to the government that they have stopped doing them. Because when the gold bonds were launched, gold was at 27,000 rupees. Today it is at 50,000 rupees. The kind of IRR that gold has delivered is mind-blowing. So point is that people have got used to these investment instruments. That was the first very, very important step. Now they are looking at the India is shining. They are looking at India is making money. They are hearing these stories of SIPs. They are hearing these stories that how this guy invested 1,000 rupees a month and he was able to build a 1 crore rupee portfolio, or he was able to buy a house. So they are looking at that story. They are interested about it. The only problem, as I said, there is no right advice. Because at the end of the day, advice cannot come through the banks, because banks have a different niche. They are meant to do a different thing. So where it went wrong in the last 7-8 years was that depending on bank, every scheme is available through a bank. Now even a Atal Bihari Pension Yojana, which is such an amazing scheme that you tell your servant or anybody in your house to invest 400 rupees a month and he will get 5,000 rupees a month at the age of 60. Isn't it amazing? But how many of us have even been able to do it for our own staff? I have sent my own boys to the bank 6 times. They are not able to figure it out because there is nobody interested there in selling that. So this whole distribution framework and understanding, like US, UK, today has a regulator for distribution. So they understand it is creating entrepreneurship. If we are able to create 1,50,000 people or 1.5 crore people, 1 crore people who are into selling financial products, they are 1 crore entrepreneurs. Each person may employ even 2-3 people. You're creating 5-6 crores of job. So I think that is the building that ground layer or building that ground distribution and promoting that ground distribution, not only depending on banks or digital, is the key missing link. And I think people will come. Now with the knowledge is there, they're hearing about it. There is so much, the fin influencers are playing a big role, good and bad, both. Because, they're every type of people. They're ethical people, they're non-ethical people. And there are some very interesting stuff is happening, like you talked about tokenization. Now on infra projects, can they be tokenized? Okay? Or the REITs. Okay? It's giving us an opportunity to own an infra projects. And, InvITs and REITs are one of my I like InvITs at least. I find them quite exciting. It's a small part of my portfolio. It makes me feel happy that I contributed to that infrastructure project, maybe a minor one. And that is going down to the HNIs, it's going down to the individuals. So I think with more money in the hands of people, with the tax breaks, more white money coming in, there's going to be much more investment happening. But the whole cusp of this thing is financial education, which needs to be spread. So I think financial education is a big thing. And we have and the products today, earlier what used to happen is that products were created by the company and then whether you liked it or not, you had to buy that product. Now that is also changing. Products have to be based on data. Products have to be created for a customer segment. They need to meet their need. So that Appleization of the financial products is next big thing. A lot of work has happened in the last 1 year. We are trying to do that. Like we have created a credit card. Now there are so many credit cards. How do we make it different? We have made credit card for high spenders. We have made credit card for entrepreneurs, where you get up to 6 points for every 100 rupees spent. That is 6 air miles. So if you are spending 10 lakhs on Google AdWords, at the end of the day, in the year, you will have 8 lakh points towards your tickets, which means you can travel the world. Your whole business travel can be free. Because that product has been made for a segment in mind. It is not made for the whole public. So these niche products are going to be the future of financial services, that where you have to understand your customer base, understand that data, and that's what I was sharing with you. Data analytics is becoming more and more important, and then developing those products for that segment of the people. In fact, I have been discussing with a lot of general insurance companies how we can use the data insights. One of my competitors has done a fantastic job. I have to give him credit. I'm not taking his name. But fantastic data and insights and fantastic products created, which are actually profitable for everyone.
Yeah, I think totally agreed, especially the bit there is no right advice. Telling that to a management consultant, so fully taken. My next question, I think it's for both Balaji, you and Dipu, you. With India uniqueness, what do you think we can still lift out from more matured economies, be it insurance penetration, be it infrastructure funding? What's your take on, what do we need to learn?
See, basically we need to learn first and foremost is risk management. Because risk management is the key. Because there's no point having 7-8 good years and 1 bad year which will wipe out the accumulated profits, and more importantly, shake the confidence of the entire ecosystem. So first and foremost is risk management. And second thing, take a life cycle perspective, because too often we are more bothered about the short term rather than the long term, whether it be the total cost of ownership or the total life cycle returns. These are the things which people should look for. And third and foremost is a sharp focus on the customers. There are different set of stakeholders. what are the benefits to each set of stakeholders that will accrue and what could be the appropriate product design. Because gone are the days wherein one size fits all. Like Prashant spoke about how Zoho has done. They've done a fabulous job of smaller enterprises which can access the same slew of services which larger enterprises were accessible because of technology. Today we have technology in two ways. One, in terms of ability to access data. Typically if you take insurance or banking, there are a large number of customer data points which makes applicable of large models. But if you look at wholesale or B2B or infra projects, the aggregate number of data points would be lower. But what you get is the number of data points per customer is very, very large. How could you build up models? For some of the older people, they might look at a book written by Martin Lindstrom around the turn of the century called Small Data. Now, how do you actually look at it and find? That's something that's very, very important. And finally, the most important thing is I take no responsibility for what was said in the last 64 seconds. And finally, the most important thing is whatever solutions we are doing, it should lead to a much more sustainable world. So that let's not look at only from the prism of commercial returns, but more importantly from the view of environmental returns.
Your query was around what is the range of technologies we use?
No. My query was what can we lift out, especially
What can be?
especially around insurance, right? What are the best practices you think we should be looking at from more matured economies?
Okay, got that. See, when you look at insurance industry in India, the biggest, problem statement for the industry is increasing penetration. In general insurance, our penetration is 1%. This is basically the total premium of the industry as a percentage of GDP, and the global average is 3%. So even if we just multiply our business 3 times, we'll be on par with global averages. So one thing which we need to do there is, obviously take it, beyond the main centers, to every corner of the country. And that's something which, we all have been doing as in all insurance companies, in partnership with the regulator. So one thing which we have done, for example, if you look at smaller cities, you don't want to come out to typical brick and mortar offices because ROI comes into the equation. So one thing we've done, we've come out with a concept called insurance on wheels, by which we have a digitally equipped van and it moves from place to place and customers are informed in advance. So when they come there, they can get all their services fulfilled, whether it's buying a policy or asking for a claim or any other aspect of the life cycle. So that's one way, by which we can increase penetration. The other aspect is, ensuring that the entire product literature gets simplified, because a lot of people sometimes come back and say that they may not be able to understand, exclusions from the policy. So we have come out with a tool which we have launched, but it can be even accessed by, people of any insurance company. It's a Gen AI tool. So you upload the literature and it tells you, in very simple form. So it's a very simple but a very powerful use case of how you can leverage technology to basically make it simple for people to understand, because simplicity drives scale. So this is the, second thing which we have done. The third is, to expand the range of products. If you look at a lot of people and if you ask about insurance, typically they'll have health insurance, they'll have motor insurance. So to give you one example, we found a white space. We saw a lot of double income, no kids couples, but they had a lot of pets. Then we launched pet insurance. So, similarly when, people were increasingly in a digital world, right? And today the threats have moved from the physical world to the digital world, we launched cyber insurance. Ultimately, to the point that my co-panelists made about risk. As risks evolve, even the products need to evolve. So coming out with new forms of distribution, expanding the range of products, and leveraging technology to bring simplicity at scale. I think these are three factors which will drive up insurance penetration going forward.
Thank you, and I know we are on time. I think that this was a great discussion. Thank you for your thoughts. Essentially, we are in Amrit Kal. By 2047, we want to be a 30 trillion economy, which is about 9x growth. We want our per capita to go from about $2,700 today to $18,000. We want all our citizens to be insured, protected. We want access to the last mile. We want us to move from financial well-being to financial planning, from financial planning to financial well-being. So I think great thoughts, gentlemen. Great having you here, and thank you everyone for listening.
Thank you so much for that very, very pertinent discussion. Wish we had more time. Sorry we started the session a little late because our previous session went a little longer. And having said so, we've definitely had a very interesting session. This is much needed session, I would say. On behalf of Exhibition India, we thank all our panelists, essentially the moderator of the session, for wonderfully conducting. So may I request you to kindly present a memento to all our speakers of the session. We'd like to present a memento to Mr. Sanjiv Bajaj. Thank you so much. Thank you so much, Mr. Bajaj. Very, very relevant points from you. Thank you so much for bringing that spark to this discussion. A big thank you to Mr. K.V. Dipu. Very candid, but very, very, in a very relaxed way. We had some very important points coming in from Mr. Dipu. Thank you so much, sir. A big thank you to Mr. R. Balaji. Thank you so much, sir. We're very sorry for that interruption that happened. But like you understand, it's a big exhibition and there are parallel stages which are on. But thank you so much for sharing your thoughts with us. May we thank Mr. Prashant Ganti. Thank you so much, sir. We've also had a great presentation from Mr. Prashant Ganti just before the panel discussion. Thank you once again, sir. A big thank you to Mr. Akash Sethi. Thank you so much for bringing in those new ideas and perspectives and sharing with us. Thank you so much, Mr. Sethi, for sharing your time and your thoughts with us. And ladies and gentlemen, I would request you to bring in some energy in the hall by putting your hands together. And as we thank our panelists and also our moderator of this session, wonderfully conducted the session, Mr. Sidharth, Diwan, and on behalf of Exhibition India Group, may I present a memento to the moderator of the session.